Hello everyone, welcome to another weekly market review. It is the 3rd of May 2021. Ethereum has broken 3000, Bitcoin has stabilized between 50 and 60,000. Nobody would have believed that a year ago. So we are at pretty surreal levels, and let's look at what we need to do. Total market cap, we have a 7th consecutive green month. We did not get this in the previous cycle in terms of just the trajectory and the price. This move in this cycle has been absolutely incredible. If we look at it in terms of time and price, Jan 2015 was the bottom, and Jan 2018, so that's literally 3 years, about close to 1100 days. And what did we get? We got pretty close to about, let's say, about 330x. That's what we got in the previous cycle. Let's look at where we are in this cycle. So we have 882 days, and what we've done is close to a 23x. A 23x with this kind of a market cap is absolutely incredible. If you've looked at my macro picture charts and macro picture targets, you will know that we are slowly approaching those. It's very, very significant. I mean, also in terms of time, we are cyclically getting close to what could potentially, be the end of this year, starting of next year. At some point, cyclically, this will get interesting, in terms of what the market could do. Let's just quickly look at momentum on the monthly. This is something we haven't looked at, and ADX is currently at about 61. Just gonna pull out a line. I have already pulled out a line. 61 on the ADX. Let's see where it matches up. It matches up to June 2017, guys. Here, 61 on the ADX. In terms of cyclicals, that's pretty close to where we are. May 2017, June 2017 was where close to all BTC was topping out. We're going to look at all BTC today as well, but you'll know in terms of that cycle, we are getting close to levels where we should be getting close to where the value could end up moving back into Bitcoin. What happened May and June was all BTC found euphoria. The biggest gains in these 2 months, by the way. So we don't know, we are in May or June, but it could be possible that last cycle's May was this cycle's April, and last cycle's June, Ethereum was pretty much going on its own. So we're doing something pretty similar. It is possible that we are in last cycle's June, where we could be right now. And in terms of that, what happened was we got a correction in odds against BTC, and the move after was all Bitcoin, and most of the people got trapped in altcoins, and finally Bitcoin derived all the value and actually made people capitulate all the way close to when it was making all-time highs. End of November, early December, when Bitcoin was making all-time highs, is when all BTC got its second spike, or what we call the exit pump. So these are still cycles, and they're very fresh and they're very new. This is only the 3rd cycle for Bitcoins and altcoins, so we have to see. But as of now, seasonality has been working really well. The cyclical nature has been working very well. And everything about this cycle, though it's not similar, it's moving in a totally different trajectory. It is still rhyming. No matter what we say and no matter what we think, it is still rhyming. So that's something to watch out for. Let's just chart the total market cap. That's enough of macro. Weekly, very strong recovery, very solid candle on the 4-hour. This is about where we were in the previous review. Spoke about the swing failure we got on BTC, strong impulse from that, and that did look like a bear trap. and we have ended up breaking the significant resistance that we were talking about and flipping it as support. So it's extremely solid what has happened. If you look at it, this is likely to be another wave, looking for about possibly another 4 to 5% on this, and then getting a correction. I would say that if we do end up getting a correction somewhere soonish, somewhere close to another 4 to 5%, would look for this daily level, the top of this channel, somewhere around here, to hold again if we do get that next correction. What would be very bullish is if these lows are also close to what may end up being the 382. I'm just pulling fibs to find where the potential top could be, so we can find match significant levels on a retrace. So this kind of matches up well. Either the 382 if price is too bullish, but there'll be good confluence with the anchored VWAP along with the channel top and the daily level for this to be another level to be looking for a decent reaction once we do get that next consolidation. In terms of looking for what could make this bearish, I think that wouldn't really be something to look out for unless we start charting out the monthly open. Let me just look at the May monthly. The 1st of May. Okay, so here's the monthly open right here. Okay, this is now going to be the previous monthly open. This is the current monthly open. It's likely, I would say, that we will break down below the monthly open, and once we do, we can catch the retrace, and a bullish confirmation will come once we do break back up above the monthly open. We will have that bullish confirmation, but there is potential probability for us to move back up here and then build some kind of another consolidation structure to move out of. And I would say if we actually break back into this channel, the actual real bear case only starts to come here once we start breaking below these support levels that we formed in the previous correction. And I would say then this is what the actual bear case would be. For now, everything looks very healthy. That is what we were talking about even in the last review. All we wanted was to see if Bitcoin can hold that weekly level. We're going to get to the Bitcoin chart soon, but anyway, for now, our total market cap looking very healthy. In terms of the macro cycle, I just kind of reflected where it is potentially we could be. Altcoin market cap on the monthly time frame. We've had a really good monthly close. Let's quickly look at the cycle comparison. I think for this we need the Tatum price range. Yeah. So again, altcoin market cap last cycle, the gains were just absolutely surreal. If you just look at that, this is going to have this wick. What I should do is, for the altcoin market cap, because I don't think the wicks will be that accurate on this, I'm just going to go from candle to candle, and you can see it was still 7,000, close to a 7,000x. That's what it was, the altcoin market cap from the cycle bottom to the cycle top. If you look at where we are right now, so this is about a 200 and what I would say about 40x. That's a 240. Sorry, that's a 24x. I was just like, no, my portfolio didn't do a 240x. But yeah, so that's about a 25x close to where we are right now. Again, we have to understand in terms of market cap, the gains have still been absolutely incredible. Bottom of this, we were close to about 50 billion. We have altcoin market cap closing monthly above significant 1 trillion level. You have to understand that there are not too many assets in the world today that have this kind of a market cap. I would say that unless we are measuring this against the dollar, so what I would say is that unless the dollar absolutely goes into hyperinflation, we cannot see gains like this in this current market. In the current condition, we are at 1 trillion. If the entire total market cap, considering Bitcoin dominance, is close to 50%, total market cap is above 2 trillion. 10 trillion is where a lot of the value from multiple assets would be eaten up by cryptocurrencies. But beyond 10 trillion, it's basically just the dollar in being in big trouble. That's because this is being measured against the dollar. That's what it would be. And I'm not setting targets for midterm and near-term targets. We do have them from that older weekly review. I'm just doing a slight macro comparison, because currently everybody is pretty caught up in the short-term gains and a lot of euphoria. So you just need somebody to look at what's been going on. Again, we have such a small sample size, guys. Already you've seen this cycle is so different from the last one. Monthly ADX is at 60 right now. Just in terms of price, so we did have 1 2 3 4 5 6 7 8 9 10. We actually had 10 green monthly candles on the altcoin market cap. This is in 2017. So what we have now is 1 2 3 4 5 6 7. We still have 7, just like the total market cap. But you can see basically since the March drop in 2020, it's basically straight up. Barely any sideways, no major drops. This is as bullish as the market can look. In terms of a higher time frame, price is making higher highs. Even the DMI currently has been making higher highs. You can see from the February to the April high, the DMI as well made higher highs on such a high time frame. That's very bullish. Generally on higher time frames, what you get is one big momentum, and then you see the DMI starting to decline, which is potentially what could happen now. But price can diverge on such high time frames for quite a long period. In terms of the strength of the high time frame momentum, this looks incredible, guys. This looks like there could be still room to go. In terms of time, we've already seen it's 800 days. This move was about 1,000 days. That takes us to December and January of the coming year. But we have to see what kind of retrace at least BTC gets. Once it's such a big asset, we can only reduce that depending on how high it goes. So it's kind of difficult to start projecting when we don't even know about our upside yet. So that's something we have to look at later. In terms of structure and price, I did tell you we supported all the buyers down here, supported price on the drop below. So for the altcoin market cap, this looked very healthy. This looked like a bull flag, and if this is a bull flag breakout, what we can do is we can plot a measured move target for this. That takes us to about 1.45 trillion. That's the measured move target for this bull flag breakout that we have. In terms of channels, we have quite a clean channel, which is capping us out after another 3%, 3 to 5%. The top of this channel, it's likely we could get a reaction. What would be most ideal is if we can get a reaction from the top of that channel and either come back to test these tops or come and test the mid channel. This would be very bullish, a 382 retrace, because if this is the first impulse and the second impulse out of here, this would be the third impulse out of here. But considering where we are in terms of momentum, I cannot see uh, this coming too deep, because now I think, as this is that phase of the cycle where everybody who's out of the market, they start to hate on this. We've been seeing on Twitter, Charlie Munger was hating on crypto, and now Max Payne is basically up. This is, if it is the last 5 to 6 months of the cycle, and this is the direction in which has to go, Max Payne has to be up now, guys, because everybody who is kind of missed out is now looking for what they would call relatively cheap. Relatively cheap would now be Ethereum under 1500, or Bitcoin in the 30Ks. That's what relatively cheap would be, and that's what the crowd wants now. And you have to understand, okay, there's a lot of people in crypto and they're making a lot of money, and there's that narrative of everybody getting too rich, but it's still a very small percentage if you consider the world's population. But since crypto is in the news, I would say about 10% of Americans, 10 to 20%, something like that is the number, the percentage who are invested in crypto. So the rest of the crowd wants in now, guys, and for them to want in, either they just have to grin and bear it, bite the bullet at exorbitant prices, or just have this potential of Max Payne, where you don't get a deep retrace and you just keep watching and keep wishing that all the times your friends were telling you to buy cheaper, you would have gotten in. So now the Max Payne is for the normies. It's for the majority of the crowd. And what I would say is, I'm pretty surprised more institutions have not gotten in on Bitcoin in this 50 to 60k range, because we will get to Bitcoin after this, and if that weekly level, even if it breaks and it holds eventually, these institutions that have missed out on this early, I think they are the ones who are also going to be really regretting it, and we're going to get news of institutional FOMO even higher. So that's something significant. But for now, very healthy, another 3 to 4%, 5% on this, and then looking for a reaction to get some kind of structure to manage risk again for potential continuation. BTC on the monthly, we have the first red month after 6 green ones. This red month is signifying consolidation. You can see odds against BTC are doing so well. On the weekly time frame, we had that confirmed weekly breakdown. We got that swing failure last week. We were looking for potential upside and looking for what kind of a reaction we get here. We closed the week above it, which is very positive. And now what we are looking at is for a reaction at our cipher target, which lies close to 61,000. If you haven't seen the cipher, I'll just quickly draw it out for you. This was the cipher, and we have our target up here at the 3-day level. So if we do get that confirmed target at the cipher, this is the weekly level again, becomes the level to be managing risk. You saw on my Twitter, I backtested this strategy. BTC does this a lot, and the safe play eventually does become, once price breaks up above this, to manage your risk from this weekly level. So still looking for this target to be achieved for the cipher on Bitcoin, and then looking for that retrace onto this weekly level. You can see what we have is two monthly opens very close to each other, and essentially what this does is that once we do end up breaking up higher, potentially breaking out of this range on Bitcoin, you expect this to become a very strong level of support, because so much price action has happened here. Not only that, I would just go into what else has been going on BTC over here. But for now, very healthy, everything is looking good. Anchored VWAPs from the lows are being supported, from each low are being supported, and price is moving up in a healthy manner. Nothing bearish about this right now. Heading to the target for a cipher, looking for another consolidation from there for potential continuation in this market. So for Bitcoin, this is just something significant that I wanted to speak about. Something I spoke about before, one while we were consolidating up here. And basically nothing has changed up here, guys. You look at this historically. This is basically large wallet inflows. Okay, large wallet inflows um, kind of helps us to signify how much uh, how much Bitcoin is exchanging hands at these certain price levels. Because what happens is on exchange we do have on exchange volume, you know, and but we don't get this off exchange data, and a lot of times the big transactions are all happening over here. These big bubbles are close to 100k Bitcoin each. So what I would say is just off exchange, the amount of Bitcoin that is exchanged hands over here, it's likely more than 1 billion BTC, guys. And if you add whatever Bitcoin we have on exchange, it could likely be anywhere between 15 to 20% of the entire supply of Bitcoin that is exchanging hands at these levels. And what are we getting? We're getting support at the levels where originally a lot of buyers stepped in. Okay, this is where Elon Musk announced that Tesla is in. Mid to low 31Ks, and you just look at the FOMO after that we got. But this big chunk that came in, this is essentially still holding price. Of course there's other technical levels as well, but just prices where a lot of Bitcoin is holding hands, it's ending up proving itself. This is just looking like a big reaccumulation range. And this is just think about it, it's no joke. At these prices, if 15 to 20% of the entire supply is exchanging hands, I don't think price is going to come back here, guys. And if it does, these guys have deep pockets. This is not, what you have to understand is these buyers, a lot of this is institutional buyers. These are not guys who have gone all in. They would wait for more. These are buyers who are looking at very macro perspectives, very macro time frames. These are strong hands. So if price does come back to places where they find it to be of value, you will see them get back in again. See, this drop down here, it created a bit of scare. There was not so much BTC exchanging hands, but once price started to find support, look at what happened. A little bit FOMO again. This is like 50k BTC each, 50k, 45k. This is about 150k BTC that exchange hands again once price kind of started to find support, broke above that weekly level. So again, very significant, guys, like what is going on. And what I would say is, yes, we can hit that cipher target around between 60 and 61k and come back down, hold that weekly level. But once price does end up leaving this range, I see no reason for this to become a very high time frame level. Depending on where BTC goes, if there is to be a bigger correction, say we go to 110 120k and end up having some kind of a correction, this would just end up becoming that floor, that would then just hold price. So just so significant off chain what is happening, and something that people who are just staring at charts on TradingView are not being able to see. It's a significant picture of what is happening in the background, and this is just what it is. So it is still not too late. A lot of people who are just thinking, oh, we want price to go to the 30Ks. I would say this is where a lot of big money is getting in. If you're looking at relative terms, we guys got in, say, sub 1k on BTC. So this just seems absurd. But if somebody never got into cryptocurrency, this is where big money is getting in. In the financial world, big money gets in on the ground floor, and then they pump the price up to somewhere where they can, exit with their liquidity. So this is them building a new ground floor, guys, because they accept and they agree they got in on this late. But what's going to happen is a lot of crypto retail, because of what they will do, they will end up wanting to exit, because it's always like that. Market flushes in the old players and new players get in. There's many people who are absolute noobs, no coiners, who've bought in this range, and they're like big bulls. They believe that this is going to change their lives. And who knows, maybe it could. If this ends up being the new floor, maybe it could go to absolutely life-changing levels. So just understand, guys, it's still very much a range. We have now solid and clean levels to be able to manage our risk. And I would say that the next consolidation, likely BTC would move out of this range. So it's seeming like it's only a matter of time now. Large caps against BTC, the monthly close is absolutely glorious. Next clean resistance is about 20% up. So you have another 20% for the next significant resistance. Let's look at the weekly. Weekly again, we found support at this weekly block, which was very significant level. This is us breaking out and retesting very big range. This is us breaking out after, what is this, 2019, July 2019. So that's almost 2 years. Almost 2 years of a structure. We're breaking out. We've hit the inverted head and shoulders target already, but in terms of upside, we still have some potential upside on the higher time frames, the weekly and the monthly. 3 days capping this off right here. It's a very significant level. So on the 3 day, I would say that you still need to flip this. We're getting some decent reactions and rejections from here. We flip this and we can look at this nice potential 20% move towards the monthly. Look at it on the 4 hour. So you got that sharp move down. This is where we were last week, and we were potentially looking at whether we get that slow bleed like we got over here. If the market is bullish, we break this resistance, find it into flip it into support. And essentially we have gotten that. We've broken the high that made the low. So this was a range on all BTC. We broke the high that made the low, made a higher low, and also again a higher high. This is trending on the 4 hour, though of course right now momentum is dwindling into this 3 day level. So I would still say that this on large caps against BTC and general alts against BTC, it becomes a very significant level, and currently we are getting multiple rejections from it. So I would say this is key resistance until flipped into support, and then we can look for that big 20% move. Until then, there is still potential for us to come back down and at least test this weekly level, and then we can look for a place to manage risk over here. In terms of charts, this is the big one, guys. This is DeFi. This is what we all loved all the way till February. Now we have what is potentially been a 85 day, nearly a 3-month range. We have a confirmed breakout above this 3-month range. This is the daily time frame. This was the daily block, that shifted market structure, basically held us down as for resistance, in the strong range. I would say there is potential for this to be that really strong move. We have a measured move target for this, which is significantly higher. Another 44% move, guys. This is potentially possible. This is something that could really still manifest, because this doesn't lie. Just quickly look at it on the weekly. Okay, so on the weekly we do have one level of resistance, which I would say is still significant, and essentially the second level of resistance is this weekly block, which would then resonate, and that would match up with the potential measured move target. So weekly block. So but we have this weekly resistance. You can see this. This is actually a more significant block, but there is this weekly resistance, which is just another 4 to 5% higher. So there's potential to get a reaction here, but this is a very tight wind up. So very tight wind up. Just look at it on the RSI. Sometimes you can see these. See it on the 3-day time frame. No, let's look at it on the daily. So yeah, you can see it's quite a tight wind up, guys, and currently we have broken out from it. This is the structure on this, and we're breaking up above. There is confirmation on momentum as well. We have one resistance, but we have a measured move target, which is 44%, and this is just so clean. Right now, long consolidation, and starting to break up from 90-day consolidation. These are the kind of bets when you're full time, you wait for, and we got that confirmation. We're looking for it over the last month or two, and finally DeFi looks like the narrative. A lot of DeFi majors, we've been playing Aave, Uni, they have been outperforming ETH. So if you're looking at things that need to outperform ETH, just look at other things that benefit from the ETH ecosystem. So it is coins like DeFi, Uni, Matic. They all have good liquidity as well, and they're likely to outperform to the upside, which shows large cap BTC is showing a potential upside of 20%, and DeFi is probably going to be 2x that. So very, very significant chart and absolutely tasty. For traditional markets, I have a relative chart of the staples against SPY for you. The staples do well in risk-off environments, and currently what you can see, and this is a monthly chart. I'll just quickly show you. Here we go. So risk-off environment, there you go. Staples did really well. We had a little spike over here, but here's the other risk-off environment where staples did well. Okay, so we have a support level. It has confirmed as resistance, and now we're starting to break down. So what this is suggesting, this is very macro, again very high time frame, that we are still very much risk on, and staples are in a strong downtrend. We have just confirmed long-term support. Look over here, resistance flipped into support, strong reaction, support again, broken down, flipped it into resistance. So we are again breaking down. It just confirms the perspective of a continued risk-off environment in the macro time frames. Very quick rundown of commodities again. Lumber is in outer space right now. Corn approaching high time frame resistance. Wheat approaching high time frame resistance. Soybean high time frame resistance. Palladium is breaking out. Sugar high time frame resistance. Silver high time frame resistance. Same with natural gas. Same with platinum. Same with gold. So commodities, essentially a lot of them are sitting at high time frame resistances. The play would then be to allow price to flip these into support and then look for further upside, because as of now they are just really ripping. It's difficult to find a place to manage risk on these. I would say, just like crypto, don't FOMO in on these, and if you really want to get in on some of these strong trends, just wait for some kind of a pullback.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!